Hi, today I want to take you through a trading strategy a lot of traders use very successfully. It's the gap and opening range breakout. The opening range, usually the first 15 minutes of trading after market opens, is the most active and volatile period of the trading day. And I believe it deserves special attention from every trader. Having said that, I must stress that it's not for the weak-hearted. In order to trade the strategy successfully, you must have the ability to think on your feet and act quickly. Over time, I've observed that this strategy works best on futures. And I also must stress the importance of risk management to the strategy. It's absolutely essential for you to have discipline and stick with your stop losses without fail. Let's go ahead and run the strategy. Open the scanner, click on gap up and opening range breakout. It was here in my most recent scan, so I ran it directly, but you can also get there by clicking on all scans, price scans, and gap up or gap down. Let's look at the conditions for a moment. The first condition is the gap up. Today's open is greater than yesterday's high. The second and third conditions are checking if the current candle high and current 5-minute candle close are greater than the high at 9:30 in the morning, which is technically checking for a breakout. The ideal way to work with the scanner is to set up an auto alert. This way you will get a notification as soon as a new stock appears on the results. This is an amazing feature that is scanning the markets real time for you. Let's go ahead, click on activate. The bell icon now appears in yellow, showing auto alert is active. You can save and rename the scan first. I'll rename my scan. Let's click on save and run now. My filter is preset to futures and Nifty 200. As you can see, I have about 17 results here. So let's click on one of the results. I'm going to click on Shriram Transport Finance. We get the 5-minute chart here on futures. And let's look at the opening range for the day. Let's go ahead and mark them on the chart with horizontal lines. Okay, I'm going to click on T and drawing and horizontal and pick up the lines here. The low at 9:15 happens at 1011.9. The high is at 1028. As you can see, the breakout occurs immediately after 9:35 when the candle breaks up and closes at 1036. You could have traded this with a stop loss at 1011 and achieved a target of 1070. For these kind of breakout trades, you should stay in your trades for a minimum price move equal to the size of the gap. However, if the price shows the trend continues, you can use stop loss rules to extend your gains. In this case, the moment the stop crossed 1060, I would tighten my stop loss and protect my profits. I've often noticed that breakouts that occur in the early hours of trading produce the best results. You should always trade in the direction of the breakout. You don't have to worry about this as the scan is ensuring you get those results only. Let's look at another chart now. I'm going to open Motherson Sumi. I've already marked out the opening ranges here, 100.7 and 102.3. I've also marked yesterday's high of 99.3. The stock does retreat and goes below the opening range low, but does not close below it. And then it breaks out upwards later in the day. For very narrow range openings like here, the ideal stop loss can be either the midpoint between today's low and yesterday's high, or a couple of points below yesterday's high. That's a decision you need to make based on your personal risk rules. The gap pullback buy is another approach popular for trading opening ranges. When you spot a narrow gap up on the chart, the price could immediately start moving down. And in this case, you should wait for the pullback and choose to buy near the low of the day with yesterday's high as a stop loss. Thank you and see you next week.